In this first episode, we're going to cover the bare bone basics of cryptocurrency and then go through a whirlwind history of crypto. So firstly, what is cryptocurrency? Quite simply, you can think of it like a digital currency. It's similar to the US dollar or the Australian dollar, but it's also very different at the same time. So we're all used to the idea of fiat currency, that is currencies like the euro, the Australian dollar, the Great Britain pound. They're backed by government and transactions are verified by banks. We have physical notes that we can use to buy and sell goods and services, or we can transact using digital payments like EFT, BPay, and direct debit. Merchants like the local supermarket have payment facilities so you can transfer your Australian dollars from your bank account over to their bank account in order to pay for goods. Crypto is similar, where you can transfer crypto to pay for goods and services. However, it's also different because it's not backed by any government and there's no central governing body. Crypto transactions are not maintained by a bank as well. The way crypto transactions are accounted for is by this big ledger, which is called the blockchain. So this is a very important concept for cryptocurrency, and we cover it in a later episode. So in terms of the history, most of us think about Satoshi Nakamoto in his white paper, but actually that came much later. Cryptocurrency and the origins were founded much earlier than that in the 1970s by a computer scientist called Ralph C. Merkle and cryptographers Whitfield Diffie and Martin Hellman, who in 1976 published a white paper called New Directions in Cryptography. So it outlined the basic concepts around what we know today as a public key and a private key, and 30 years later that would be used by Bitcoin. So a public key is what's used to receive a payment. So it's similar to giving your friend your bank account details when you want them to chip in for dinner. And a private key is what protects your crypto holdings and your crypto assets. So that's similar to the PIN when you're at an ATM, something you want to protect and you don't want to give to other people. So from that point in time, when the white paper came out in the 1970s, not that much happened for quite a long time after. In the 80s, there wasn't that much action, but in the 90s, there was quite a flurry of activity with cryptocurrency. So in 1990, computer scientist David Chaum, he launched a company called DigiCash, whereby people could transact online in a safe, secure environment using DigiCash. Users would withdraw money from their bank and then be able to transfer it over to buy cyberbucks. And then cyberbucks were able to be used to buy goods and services. But it ultimately failed because there wasn't a large uptake. But still, it would set the scene for what would come to be known as cryptocurrency. There were also other attempts from other companies to try and get this digital currency up and running outside of the government's fiat currencies. So companies such as B-Money, Hashcash, Floors, and BitGold all trialed, but again failed to gain traction. But interestingly, Hashcash, B-Money, and BitGold were all based on what we know as proof-of-work transaction systems, which Bitcoin later used. And we'll cover later proof-of-work in another episode and how that works. So from that point, it took another 10 years for things to really take shape. In 2008, a white paper was released called Bitcoin, a peer-to-peer electronic cash system, authored under the pseudonym Satoshi Nakamoto. It laid the groundwork for cryptocurrency and how we know it and how it operates today. So a year later, after that white paper, the first Bitcoin was created and the first Bitcoin transaction occurred. So Nakamoto sent 10 Bitcoin to a computer engineer and programmer called Hal Finley. The price of Bitcoin at that stage was US dollars 0.00076. And then in May 2010, a US crypto enthusiast posted on a Bitcoin forum. He said, "I'll pay 10,000 Bitcoin for a couple of pizzas, like maybe 2 large ones so I have some left over for the next day. I don't like things like onions, peppers, sausage, mushrooms, tomatoes, pepperoni, just the standard stuff. No weird things like fish toppings or anything like that. If you're interested, please let me know and we can work out a deal." Another forum member saw this and thought, no, this is a pretty good deal, and sent that guy 2 large pizzas from Papa John's in America and received the 10,000 Bitcoins, which today is worth over 600 million Australian dollars. So then in 2011, the price of Bitcoin rose to $1, And at that stage, it was still mainly being used by the dark web as a means of payment. In 2012, the price of Bitcoin rose to over $100. And in 2013, coins such as Dogecoin and Ripple were launched. Bitcoin also rose to over $1,000 US at that stage, which was about the same price as an ounce of gold. In 2014, more altcoins were launched, such as Dash, Neo, and Stellar. And the security risks around cryptocurrency were revealed. The largest exchange at that point in time, so an exchange is a place where people hold or house their coins, and we'll cover that in more detail in another episode. So that largest exchange in 2014 was called Mt. Gox, and it imploded after hackers stole 100,000 Bitcoin from 744,000 client accounts. So what they did was they changed the value of the Bitcoin holdings from those customers to 1 cent, purchased them, and then as such took the coins out of their accounts. So then in 2015, the second largest crypto that we know today, Ethereum, was launched. And in 2016, one Bitcoin was worth more than $1,000 US. In 2017, we saw a big rally where the price of Bitcoin went to over $25,000 US, but then it faltered 12 months later and fell back to $5,000 US a coin. In 2018, we also saw non-fungible tokens, which are known as NFTs, where they're digital assets. And again, we'll cover those in a later episode. Decentraland launched, and they released 90,000 blocks of virtual or digital land, and that built on the 2017 launch of other NFTs such as CryptoPunks and CyberKitties. So from 2019 onwards, we started to see mainstream adoption of cryptocurrency. By that stage, more than 45 million people had crypto wallets, which was up from only 2 million people just a few years before that. In 2020, Bitcoin surged and hit a new high of $35,000 US a coin, and by 2021, it hit a high of $75,000 US per coin. So cryptocurrency in 2021 was mainly in the mainstream by that stage. On the nightly news broadcasts, you would see the price of Bitcoin and Ethereum right next to traditional assets such as gold and share market indexes. And in 2021, the market cap for Bitcoin surpassed $1 trillion, and artist Beeple sold a piece of digital artwork, an NFT, for more than $69 million US. Other large institutions were adopting or embracing cryptocurrency. So Commonwealth Bank announced they would allow customers to trade cryptocurrency using their flagship banking app, CommBank. So from here, we're likely to see more mainstream adoption from the financial sector and from commerce, and in addition, more regulation from government, bringing cryptocurrency in line with other assets such as share markets in terms of regulation and taxation. So now that we've covered the history of cryptocurrency, our next episode will cover the inner workings of cryptocurrency. And for more cryptocurrency research and education, check out our site.